So if you are watching this video right now, there are high chances that you have lost almost all the capital or 90% of the capital that you came up with into the markets to start your trading journey, to start your trading career. If that is the case, this is the exact video that you need to watch in order to learn what went wrong with your trading journey and what can be done to make it right. From where can you start to make sure that you win from here on. 95% of the retail traders lose into the markets, and there are very specific set of reasons behind them. This video is the exact video in which I'm going to tell you the exact reasons due to which most of the retail traders fail and how not to fail in the markets. Okay, now the reasons that I'm about to tell you, if you cannot handle those reasons, if you cannot amend those reasons, if you cannot make those things right, I highly recommend you. The title of the video is, you must have read it very clearly. The title of the video is, you should avoid trading. Because if you cannot handle these 3-4 reasons, then it's better that you protect your capital and maybe invest into long-term money, maybe invest into mutual funds, or maybe you can even leave it into bank FD. That will give you much better returns in comparison to what you are losing into the markets. So stay tuned till the end of the video, my friend, because you are going to learn so much about how to make sure that you end up every month in green, how to make sure that you end up every month in some profits, not in big losses. Okay, so this is from Utkarsh Bhargav. You are watching Roaring Bulls, the stock market show. Okay, so stay tuned till the very end of the video, because at the end I am going to show you some calculations that will be very crucial for you to make sure that you win big into the markets and lose little into the markets, because loss is a part of trading business. Trading is a business, my friend. It's not gambling. Trading is a business. Trading is about taking calculated risk and about handling small losses and about trailing your winners. So we are going to learn all of that in this video. Let's quickly jump on to the notes. Okay, so let's first start understanding from very basic thing first. Okay, let's start understanding from the very basic thing. What happens into the markets? There are total 5 possible scenarios that you have to look after. Scenario number 1 is break even. Okay? Scenario number 1 is break even. I'll explain you what is break even. Scenario number 2 is a small win. Okay? You win a small. Scenario number 3 is you lose a small loss. Okay? Okay? So this is small win, this is small loss. Scenario number 4 is big win, right? This is big win. And 5th is big loss. Now I'll tell you where the mistakes happen. Okay, what do you mean by break even? Break even means that your exit of position was equal to your entry. Okay, we are not considering the taxes and the transaction charges or the brokerage fees here. Your exit was equal to the entry. That is what break even means. Okay, so now what a small win means is that your exit was just a little above your entry. This is small win. Your small loss is basically means exit was a little below your entry, right? Your big win means your exit was much higher than your entry, right? And big loss means your exit was much lesser than your entry. Now, where do most retail traders lose money? That's what we are going to look here, okay? If you can relate to this video, just go in the comments below and write down that yes, you have been making this mistake, and yes, you now know how not to make this mistake, okay? So what happens is, who are those traders? What are the number of traders who exit at break even? It's barely 5% of the traders who exit at break even. 5% of the traders. Who are the traders? What is the number of traders who exit at a small win? Again, almost 50% of the traders exit at small wins, okay? Because they don't know how to trail their profits, how to make sure that their winners should run. That's why they exit at small win. How many traders actually exit at a small loss? Just 5% traders exit at small losses. Why don't people lose small, there's a big reason behind it. I am going to explain ahead, don't worry. Okay, how many traders actually exit with a big win? I'll tell you, less than 5% traders exit with a big win. Okay, so how many traders exit with a big loss? This is where the equation comes into picture. 95% of the traders exit with a big loss. 95% of the traders exit with a big loss. Why do this happen? That's the question. Why do 95% of the traders exit with a big loss? The primary reason is the emotions come into the picture. What are the emotions? There are two emotions that come into the picture. The number one emotion is fear. The number one emotion that comes into the picture is fear. Fear of losing all the money. Once you start to get into a losing trade, for example, you made an entry at say 100 rupees, okay? And now you see that logically your stop loss should have been maximum of 5%. So your stop loss should have been at 95, but the price has already gone below 95. The price is now at 90. You still have the opportunity to exit, but you will not exit because you have fear of losing more money. Okay, you have fear of losing more money. And similarly, one more emotion comes into the picture at the same moment, and that emotion is called greed. Your emotion that comes into the picture is called greed. So these two emotions, when combined together, they give you big losses. Okay, so you could have exit easily at which point? You could have exit easily at 95, but you did not exit because at this moment you actually forget that you will have more number of chances to take the similar trade when the trade comes into your trading profile. But you do not exit, you wait for the markets to retrace back. The markets go to 90, you still wait. The markets go to 80, you still wait. The markets go to 50, you still wait. And even some of the retail traders start to average as the market keeps on going down. Why don't you understand one simple fact that if you ignore these two emotions, let's say that you are not fearful of losing money, you are happy with giving your stop loss, the correct stop loss that was defined for you, and you are not greedy. You are not greedy, you know where to exit so that you exit in small loss or big profits. Okay, so if you are not fearful or greedy, then what are the chances of you winning into the stock market? If you are not fearful or greedy, two things will happen. You will automatically exit from this particular category. You will automatically exit from the big loss category. Where will you come in? You will come in either of two categories. You will either come into this category of small losses, or you will come into the category of big wins. Okay, so these two categories should be the category that you should focus on. This is where the 5% retail traders win. Okay, if you want to be in this 5% club, you have to make sure that you come with small losses and big wins. Now, how does that actually happen? That is the question. You might be wondering, how does it actually happen? So let me tell you one simple calculation that will actually help you a lot to make sure that you win big whenever you are winning and you lose small whenever you are losing. Okay, so let's say, let me just shift it. Let me just remove some of the drawings over here. Okay, remove some of the drawings over here, like so yes. Okay, so what is our objective? Our objective is to either have a small loss or have a grand or big winnings. So how will that happen? That's the question. So you should know how much can you risk in a day. There's something called as RPT. This is your risk per trade. I know that most of you might already be aware of the risk per trade, but most of you are not using the risk per trade formula. So I am making this video a little easier for you. We are not going to talk about RPT. We are not going to talk about risk per trade. We are going to talk about RPD. RPD. What is RPD? It is risk that you can take per day. Okay. So when you will know your risk per day, that risk per day will be the maximum amount that you will be allowing yourself to lose into the markets. Okay, this is the this is the first point that we have to take care. First we have to take care of our losses, and then we can take care of our profits later on. Okay, so point number one, you should know your RPD. How do you calculate your RPD? That might be the question that you are thinking about right now. Let's say that you have come into the markets with a initial trading capital of 1 lakh rupees. Okay, you have come into the markets with an initial trading capital of 1 lakh rupees. Okay, so it's a very basic principle that you will only allow yourself to trade with 20% of the total trading capital, 20% of your initial trading capital, that is your total trading capital in this case. So 20% of 1 lakh is just 20,000. So you'll allow yourself to trade with just 20,000 rupees in a day. You will not trade more than 20,000 rupees in a day, no matter what. Okay, so 20,000 rupees in a day is your maximum capital that you utilize in single day of trading. Okay, now what should be the risk out of that 20,000 capital? That should be your question. How much money should you be risking out of those 20,000 rupees? Okay, so to be on a generous side, the good principle is to risk just 3%, but let's say that we are not that safe of a trader, we are little bit of a risky trader. That is very much fine. Let's risk 3%. Let's do one thing. Let's risk 5% of the total. Let's risk 5% of the of this 20% capital. Okay, because you are not allowed to risk more than 5% of your daily trading capital. This is your daily trading capital, DTC, daily trading capital. So you are allowed to risk 5% of daily trading capital. So 5% of 20,000 is just 1,000 rupees. Okay, so that means in a day you should be trading with such a lot size that you should not lose more than 1,000 rupees in a day, no matter how many number of trades you take. Now the basic principle is if you lose 1,000 rupees for the day, you basically go and close your portal. You will not trade once you have lost 1,000 rupees for the day. Now you must be wondering, sir, what will happen? What will happen if I'll limit my losses to 1,000 rupees per day? I'll tell you exactly what will happen. Okay, let me remove these drawings and we'll come back to again the basics. What will happen? Okay, so your risk, sorry, 1 second. Okay, let me just change the color. Okay, so your risk per day is fixed at 20,000 rupees, right? 20,000 rupees is your risk per day, and you are your total trading capital is fixed at 20,000 rupees for the day. Your day trading capital is fixed at 20,000 rupees for the day, and your risk per day is fixed at 5% of 20,000, that is 1,000 rupees a day. Now your risk per day is fixed at 1,000 rupees per day. Let's say that you have lost this capital on day 1. You have lost 1,000 rupees on day 1. That is very much fine. On day 2, you will still have 99,000 rupees to make sure that you gain back this capital and maybe come back into the profits. Okay, that is very much fine. Now on second day, let's say that you have again lost 1,000 rupees. Okay, let's say that you have again lost, no, you will actually not lose 1,000 rupees because the calculation will change. I'll explain you how. Because on the second day, you'll have 20% of 99,000 rupees. Okay, so you'll have 20% of 99,000 rupees as your daily trading capital. So that will come around 19,000 something, 19,900, 19,800 something. Now you will be able to risk only 5% of, say it was the 20%, roughly we'll say, I don't have a calculator right now. So 20% of 99,000, let's say it's 19,000 for example. So you will be able to risk only 5% of 19,000 for the day. So you'll be able to risk only maybe 900 rupees or 950 rupees for the day. So your risk per day will be reduced. Okay, so from if you are losing even on the second day, if you are losing even on the day 2, you won't be losing 1,000 rupees on day 2. You'll be losing maybe 900 or 950 rupees on day 2. So now you are left with further capital of what? 98,000, say 98,100 for example. So you are not losing continuously on a compounding basis. Okay, you are losing actually very little every single day. But when you will win, the intention here is to win big. Okay, the intention here is to trail your profits. So you have to make sure that when you win, you win big. Okay, you are already aware of risk per trade now, and you are already aware of risk per day. What should be your risk per day? If you actually believe in these calculations, you will be able to do much better into the markets. Okay, so now when you win, how do you win big? That's where your trailing stop loss, that's where your profit trailing comes into picture. You should have a calculated set of trading rules, set of trading system. Let's say you should have a defined trading systems in place that will help you to make sure that you win big whenever you are winning. How do you do that? There are multiple ways to do so, but all those ways will be very clearly covered into the the Millionaire Trader course that is available for all of you to attend, and you can definitely go and attend the course. It's a live course. I'll be taking live sessions with you all. It's a weekend course. You are going to enjoy a lot in the course. You are going to learn a lot in the course. It's a 1-month course. In those 8 days, you will be learning a lot about how to make sure that whenever you win big, how to make sure that whenever you lose small, how to make sure that you trail your profits in a very good way, and how to make sure that at the end of the month, if you have started the month with, for example, say 1 lakh rupees, your objective should be to actually end the month with at least 1,05,000 rupees. That should be your objective. Okay, now most people have a wrong objective. If they're starting with 1 lakh rupees, they have an objective of ending the month with 3 lakh rupees, with 4 lakh rupees, with 5 lakh rupees. That is an impossible objective. Let's say it's not impossible, it's actually possible, but that again would be a total fluke. It would be dependent, it would be considered as depending on luck rather than depending on actual techniques or systems. So it is not a right thing to assume that you can go to 3 lakh rupees or 5 lakh rupees from a trading capital of 1 lakh rupees, because there are always some drawdowns. And what do I mean by drawdown? Drawdown is a phase where, for example, you started, let me show you it with a very simple graph sort of thing. For example, you started say from the capital of 1 lakh rupees, you will go up to 1 lakh 50,000 rupees, and then you will come back to 1 lakh say 10,000 rupees, and then you again go up to 1 lakh 40,000 rupees. For example, you will again come back to 1 lakh 30,000 rupees, then you go back to 1 lakh 60,000 rupees. So these phases of coming down are basically called drawdown phases. Okay, so this is your drawdown phases. You have to make sure that your drawdowns are not bigger than your profit phases. That's how you win. So all these things we are going to cover up and learn every single thing into the course. But before even moving ahead to the course, this is a very simple concept that I've explained you over here. You have to make sure that you define your risk per day. Okay, you have to define your risk per day. For a person with 1 lakh capital, his risk per day was just 1,000 rupees. Why? Because his daily trading capital DTC was 20,000 rupees. Why was it 20,000 rupees? Because he can use only 20% of his total trading capital in a day. Now, out of those 20,000 rupees, he can risk only 5% of the money, that is 1,000 rupees. So, I hope you understood the concept of risk per day. If you will make sure that you stick to this particular principle, that will manage your risk per day, I am very sure that will come up with good profits at the end of the month, and these profits are going to be phenomenal. You are going to enjoy a lot. You are going to actually end your month as a profitable month. Okay, so but the basic principle is to make sure that you know how you can manage your risk per day. The basic principle is to make sure that you know how to manage your risk to reward ratio. The basic principle is to make sure that you know how to manage your position sizing, and all of these things are actually even more important if you are an option buyer. For an option buyer, I know that for an option buyer, there's limited risk and unlimited profit potential. But just to be frank, and I think you will agree with me over here, that every option buyer actually, because of this particular reason, that I can win big and I can lose not more than the capital that I've invested, most of the option buyers actually prefer to lose all the capital they have invested just in a hope of winning big. Now, I'll be covering this particular word also in the Millionaire Trader course. I'll be covering it in the risk management part of it. I'll be covering it in the mindfulness training part of it, because mind is the ultimate, the psychology is the ultimate end game when it comes to trading. So I'll be covering it that how you can actually make sure that whenever you win big, whenever you lose small. And let me tell you in a very simple word, let me tell you in a very simple definition what is actually intraday trading. Okay, I'm not talking about maybe swing trades. I'm not, even the swing trades also covers up in the same definition, but I'm not talking about value investing or long-term investing. I'm talking about purely intraday trading. What is the definition of intraday trading as per you? Okay, you can go down in the comments below and say yes that you agree with this definition if you actually agree. Now listen to me very carefully. The actual definition of intraday trading is nothing but intraday trading is a systematic transfer of money from an indisciplined trader to a disciplined trader, right? Hear me again, hear me out just one more time. Intraday trading is nothing but a systematic transfer of money from an indisciplined trader to a disciplined trader. Now it's in your hands. It's actually in your hands whether you want to be an indisciplined trader and lose the money sorry, or you want to be a disciplined trader and actually make sure that you end up your month, end up your years into profits. Okay, so if you have liked this video, don't forget to share this video with your fellow traders. Make sure that you actually make sure that you are actually making people aware about the cold harsh truths about intraday trading. It's very important. It's your hard earned money. Don't lose it into the stock markets with indisciplined trading. You need to actually be very disciplined when it comes to intraday trading. Plus, if you're an option buyer, that level of discipline goes even higher, my friend. So I hope you enjoyed this video, but you have to make sure that you subscribe to this channel so that you don't miss out on every single analysis video that comes out every single evening for you. And we definitely discuss all the levels that are there for the next trading session for the Nifty and the Bank Nifty index, as well as for certain stocks. And if you are actually willing to learn intraday trading, if you are dedicated to actually put in some time into your learning process, I'm sure you will be earning a lot as an intraday trader. So if you are willing to be a part of this amazing course that is going to happen every month, you can just go on to our website. It's www.roaringbulls.com, and you can check out the course details over here. It's a very it's a cheap course. Cheap in the sense that you can get it for very small cost in comparison to what you have already lost in the markets. Because if you'll compare the cost of course to the cost of money that you have lost into the markets, you will see that it's better to actually learn first, and so that you can start getting decent returns from the market in long term and actually earn from the markets. So I hope you enjoyed this video. If you are interested to join the course, the description the link is available in the description below. You can check it out, and make sure to subscribe to this channel and share this video with your fellow traders. Make them aware about the important aspects of day trading, especially in terms of option buying. So I hope you enjoyed this video. This is Utkarsh Bhargav. Thank you for listening to me. You're watching Roaring Bulls, the stock market show.